Hey y'all, Zach with Real Property Associates here. Happy November. Starting to get cold here in Seattle, so whipping out the vest. Anyways, the market so far here in the last few weeks has been a little volatile. I guess last week and a half since President Trump was elected. So I did save this till now so we could talk a little bit about what's happening directly after the President-elect Trump got selected. But let's talk a little bit about the year in general so far. We have in November, $611,000 was the median sales price in the city of Seattle. 102.5%, so 2.5% over the asking price is typically what homes were selling for. Year to date, we're still at $620 is the median sales price, and we haven't had a median sales price below $600 all year, which is crazy. And the average home is selling for 4.5% over the asking price so far this year. Inventory, that's been the biggest concern, and we have seen a slight increase in inventory so far this year, in the last few months specifically, but really it doesn't look very much different in the last few years, so I wouldn't get your hopes up quite yet as far as the inventory is concerned. One thing to note is that 13%, so 13% year-over-year growth from last year, this time to this year and in November, and we've had a 12.7% growth in the median sales price overall for this year. So super high numbers still, numbers that probably aren't sustainable long-term, but again, we've had another extremely hot year just like last year. Some of the suburbs like Shoreline, I'll mention Shoreline today, year over year we've seen about 11.6% increase in the median sales price. City of Linwood, we've seen a 13.1% year-over-year increase in the median sales price, and the city of Edmonds a little smaller, 3%. And for the whole year, Edmonds is up 6%, so a little less than some of these other places that have been up more like 10%. Now let's focus a little bit on the election. So Trump was elected or was selected as the president-elect a couple weeks back now, almost a week and some change, and since then we've seen some craziness in the bond market. People are selling off, which is causing bond prices to go up, and consequently interest rates are also going up. So we've seen an interest rate uptick of approximately 0.5% in the market, depending on who you talk to. I saw read an article in Forbes yesterday. It was talking about like 0.4% increase. MSNBC had an article as well that was talking about this. And a lot of what the commentary I'm reading is that Trump's policies of wanting to stimulate the economy, specifically in the U.S., so lowering taxes and increasing spending on infrastructure are things that have caused the stock market to go a little crazy and get excited in a positive direction, and then cause the bond market to go in the negative direction, which is directly tied to the interest rate. So I'm kind of curious to see what'll happen. We're still seeing people applying for loans. I haven't seen any changes on my end as far as the psychology of buyers, but as interest rates go up, it does affect how much buying power people have and could potentially impact prices if the stimulation of the economy doesn't keep up with the housing prices. So it's something to watch, at least. It's been only a week, so this could correct itself. A lot of the mortgage people that I talked to thought this would already be corrected, and it hasn't yet. So it'll be something to keep an eye on for the rest of the year and into Trump's presidency here. So if you guys have any questions, feel free to reach out. I'm happy to grab coffee and chat. And until next time, we'll see you guys soon.